In this video, I'm going to show you the progress I've made or did not made very transparently using Quantwheel, our product that we're working on. So this is a part of a longer series where I'll talk about the updates, what I've done so far, investing my personal income, where I've got and where I'm going to, and the plan for the next week. This series will have two parts, the business and the trading. This one is the trading part, so if you watch until the end of the video, I'm going to show you the progress and you can decide whether you like it or not, whether you want to do the same thing or not. So basically, what I'm doing and what I started doing in April is I sold everything before the tariffs were introduced, or in March, and I opened a brokerage account. Now the brokerage account allowed me to trade options, and I specifically only sell options because over 70% of options that you buy expire worthless, which means that the option seller earns money. And as an option seller, you get the premium, which you can use for the income, for your retirement, or compound it and reinvest it to trade with more money and generate more income. So that allows you to have some freedom, generate additional income in a pretty secure way. Now, in this video, I'm going to show you how I messed up, how I fucked up and lost a lot of money and what I did to earn it back again. So as you see, in April, it was my first week and I already earned some money. If you see the green, it's a profit. If you see purple, it's basically an open trade. And if you see red, it's a loss. So I'm going to just show you an overview quickly in April, then I'll go to the May. And as you can see, I had one loss in May. That was because I sold all of my S&P 500 for a little bit of loss, just so that I can free up my capital to trade with more options. And in May, I have earned about 2000 in less than 2-3 weeks. And in the beginning of May, I was, or at the end of April, I started moving my funds and all the trades to different brokerage account. So that's where I lost some time trading, and I got access to my brokerage again on Monday 19th or Tuesday, and I started doing stupid things. So learn from my mistakes. What I did is, if you look at UnitedHealth management and you look at if you know the story of the stock, basically it's one of the most stable growth that you can see in a stock. They had a healthy dividend, large market cap, and very healthy growth, about 10% year-over-year revenue and profits. And then what happened here in November last year, somewhere here, the CEO got shot, assassinated in New York, and the stock dropped a little bit from 600 to 500. This was already a huge drop for a stock of this size and this quality. And then a new CEO replaced him. But what happened? The new CEO just quit. Stock dropped again. And then they found out that the company was paying nursery homes, I think, so that they take their insurance. And it dropped again. And it is like a huge drop for this kind of stock. It dropped literally from 600 to 254, I think. And you will see that here it closed at 274. So that day it was 256, but I did not have money to buy the call option or to sell the premiums at the best rate here because I didn't have access to these to my brokerage account. And the mistake I made here is I was chasing the stock, and you should never chase the stock. I already know that from way before, but I did, and I sold the cash secured options around here at 322.21, and I bought the stock. So I bought 100 shares at 322, and I sold 2 options at the premium that expire with the strike price of 315 that expired like in 3 days. So that was 20th of May, and they would expire on 23rd. And of course, I earned money on the covered call. I lost money on the stock, and I lose money on the cash secured put. But the problem is, on Thursday and Friday, I had to make a decision. All right, I have to make a decision whether I roll the options, whether I just close the position at a loss and free up that money to trade options again with that money, or I just leave it as is, buy 200 more shares of UnitedHealth management at 315 and have that loss of owning the stocks that are now $20 in loss per share. So in total, I would lose about $6,000 and I would free up about 60,000 in capital. But what I decided to do is I decided to roll the option, and the option is now, and let me show you how that looks like in my brokerage account. I decided to roll it for the next 2-3 months because I believe this stock will grow up. It just takes some time to recover. It's a slow moving stock. It should recover to around 350, 370 in the next 3 months, I believe. So this is how it looks like right now. 1 second. So this is the stock right now. I have around 100 shares at this price, 322, and it's right now at, it's around 294. So I don't believe it will drop further, but what I did is I looked at August 15th, and I basically sold some options at around 270. I don't think the drop will be that big. I will need to wait for 2.5 more months, almost 3 months. In the meantime, I can sell at lower profit at about 50%, and I'll be fine. I'll more than break even or earn some money on the options still, but there is no right or wrong here. I could have decided to let the option exercise and assign the shares. I could have just close the position, lose money, and free up that money to trade with, but I decided to just roll the option. So now I'll wait another 80 days and see what's going on, and then I'll make the decision. In the worst case, I'll roll it again for the next 6 months. I don't think that will happen, but I'm ready to do it. So that's what happened with UnitedHealth Management, and that's where I lost $3,300. So I rolled the option, took some loss, but in the next 3 months I should earn about 4,000 on top of this and be in profit. I'll let you know how that goes. So that's where I am right now. So what I'm doing next is I'm looking at a couple of stocks. I'm going to go through each and explain why. So for Fortescue Metals, this is a stock I earned already a lot of money on. Somewhere here, I was not trading options, but I almost earned double, sold it at the top, and then it dropped again to around 15. Why I like this stock is it gives you a high dividend of around 8%. This company is basically the biggest supplier of steel to China. The problem is China is building a lot, but who knows if they'll continue building a lot. And this Australian company, high dividend, I bought about a bunch of stocks here, and now I'm trading options. So the opportunity here might be selling covered calls at around 17, 18. If that happens, if I sell at 18, I'll collect the premium and the profit of 18 minus 15.5. So about $2.5 times 2,000 shares plus the premium. It could work very well, and I'll try to get some cash secured puts at this level. I don't think the options pay a lot of premium at that level, but if you look at long term, that might be a good play. I usually trade between 14 and 28 days, so let's see how it looks like on this probably earning day. The earnings probably dropped because China is not crazy about buying more steel, but it's a good quality option. Right now I don't have the data on the options chain. But that's for Fortescue Metals. We'll see how Whale does. It's traded in the US, but it probably is a similar situation. The world is not building that much. It's cyclical. The way I see what they do is they buy a lot of steel depending on the projects, and then the market just stops. The prices are hedged. You cannot buy at a large discount, and you buy 2-3 years in advance, and the supply is usually limited and regulated so that you cannot discount the steel and the ores that much. That's why the industry is pretty stable, but it's also cyclical. So the next few years, I don't think these stocks will grow a lot. But if you recognize that if there will be a bull run, if the economy recovers, this should grow a lot. So those are the steel stocks that I'm looking at. So right now my plays are just covering calls at a much higher rate, at much higher price than what it already is, just so that I can squeeze a little bit more profits. And if I sell, I'll sell in profit, so I don't really care about these ones. They're very low volatility stocks, and my goal is not to earn 50% in a month, but to just earn 1 to 4% per month. These are really good ones for me. Palantir. I had really good trades on Palantir. The stock just exploded. Probably I would not go and trade this one at some crazy levels like they are right now. I'll probably wait or see if there are some premiums of 1% gain at this level, around 90, but I won't risk it on Palantir anymore. SoFi is an interesting one. It's basically a Revolut of the US. I own some stocks here, and I'll just cover the calls at about 15.5 and more, just so that I see if in case it gets to all-time highs, I'll sell at profit and I'll collect the premium. Until that happens, I'll just squeeze the premium every 2 to 4 weeks. It's a pretty interesting one if you can buy it at a low level. That's pretty smart. It's a long-term play, and it's a pretty low market cap at the moment for this stock. What I would look at is probably selling cash secured puts here. So buying cash secured puts or selling the options at this level, strike price about 11 or 10. It's going to have a low premium, but don't be greedy. Just play the secure ones and you'll get that 12 to 24%. Again, I'm not an expert. This is not a financial advice. I'm just showing you what I'm doing and what I'm going to do next week. X, another still stock. This one is pretty good. I did not think about it, but if I did, I would definitely buy this stock. Why I like this stock is because it's boring, and it's basically, the strategy here is the US is going to continue buying from the US companies, but X will. It's a US company, US still, and a good play would be here to, if you could have bought the stock here before they announced the news that they will continue buying from the US, and then just cover the calls. You would instantly earn some money. Right now, I don't know what the premiums will be, but we'll see tomorrow how that looks like. I don't think this will grow too much, and as you can see, all the indicators show you this is overbought. It's pretty strange jump for that kind of a big market cap. We'll see what happens next. I would be surprised if it grows even more, but the volatility will open up some opportunities for good cash secured puts, probably at a level. Then you have Joby. You've probably heard about Archer. You've probably seen pretty unsecure. Compared to those, these are electric vehicles, electric drones that can just transport you from one place to the other very quickly and safely. Now, this is still at the beginning. This is a very low market cap, I think about 5-6 billion, and it's an early play, but if you can get it at around 5 level cash secured puts, might be interesting. We'll see tomorrow how the market opens. Probably on Monday and Tuesday I will trade this one. Archer, the same thing, lower market cap. It's still a company that's high volatility, so there could be good premiums here. It's a risky one, but if you sell cash secured puts, it might be interesting. As you can see here, there is not much history of this stock. It's trading at the all-time highs basically, but if you can get the premiums at you can probably get cash secured put at 8 levels. Pretty interesting one. Probably you're gonna hear about this one more and more, and throughout the years it's a long-term play. If something bad does not happen, this should be one of the leading aviation companies, intercity connection company. Basically flies the drone from one place to the other. I would probably expect this one to drop short term and see what happens next. Bank of America, another boring stock that is top. It's still at the top, but it's a quality one, and it will never go bankrupt. If you want to buy dividend stocks, more probably one of the better ones, I would probably cash secure put at 30-ish to 40-ish levels. We'll see tomorrow how that looks like. I'm looking at Coca-Cola just because it's a secure play. The stock is high quality one. I wouldn't mind owning it. It's already a pretty high price for that kind of stock, but we'll be looking at it too. The reason why I'm not looking at the high volatility stocks is I don't care if it goes up or down. I don't care if it's a boring company. I just want to earn that 1 to 4% per month and use this in my business or just spend it if I want to. HSBC, super profitable company, very nice chart, but I would right now probably not the best time. It dropped already, and if you can buy cash secure puts at 47, that would be probably a smart one. AT&T earned a ton of money. I almost sold everything. Now it's almost double. I'll just cover the calls until I manage to sell it. Right now, if I did not do that, I don't think there are many opportunities until the price drops again. While I love this stock, high dividend, and pretty uncertain now what will happen with SpaceX because of the internet devices. What's the future of Verizon? What's the future of AT&T? Are they going to sign a contract with SpaceX, or are they going to launch their own satellites? We don't know that. That's why I sold the stock, but could be a pretty good premium if there's volatility. Shell, there were huge opportunities on Shell during the tariffs, during the Trump inauguration. There was not much movement here, but a pretty good stock to own. Anyways, I wouldn't mind owning it. That's why cash secured puts are an option here. We'll see tomorrow. Merck. Now this stock is a pretty risky one at the moment, just because similar to AT&T, very nice dividend. It dropped a lot. I owned some shares here, sold them at around 40 just because I wanted to free up my capital. But if you find a good premium, if the volatility increases, there could be good options here. So I'm watching Verizon. Just to make sure you understand, I'm just looking at options that I would like to own anyways. It's stocks that I would like to own anyways. So if the option assigns me to buy the shares, I can still buy them and own them, and I don't mind. Novo Nordisk, pretty interesting one. And it's at the lowest in the last few years. Very profitable company, very interesting one, and I wouldn't mind owning them. Cash secured puts are pretty good here. Probably higher volatility on this one. Yeah, volatility is pretty good, not as high and not as low as it used to be. Sorry, not as low as it used to be, so there are higher premiums here. We'll see how that looks like and if we want to trade that one. There are a couple of other stocks that I'm looking at, but I'll record a video tomorrow. Those are the ones that I'm interested at. I want to deploy some capital there and see what plays out in the next 2 weeks and then react. Today it's Sunday, so I'm going to record a new one tomorrow, and it's just a part of the series where I'm going to show you what I'm doing, how I'm trading, what's the status, and of course using our options screener tool, Quantwheel, which is the other part of the series where I'm showing you how we're building that business. And basically it shows me the best opportunities in options and in stocks out there. Tomorrow I'm going to show you how it works and why I love it, why we started that business.